It's now free, asterisk, to trade stocks with some of the popular discount brokerages in the U.S. Welcome to Plain English. I'm Jeff, and your producer is JR. All the resources for today's episode, including a full transcript for free, are available at plainenglish.com/199 because this is episode 199. I feel like I don't emphasize the transcripts enough. A word-for-word transcript of everything you hear on this program is available for free on our website. Every episode going all the way back to episode 1. plainenglish.com, and you can explore all the old episodes. Coming up today, this is incredible, but you can now buy and sell stocks in the U.S. without paying any type of broker commission. I've had some people ask, why don't you do an episode about finance and investing? And I haven't because I just wasn't sure whether it would appeal to most people who listen. Not like taking a nap at work. That has universal appeal. But I thought this was a good way to get some finance and investing vocabulary into plain English. Even if you're not an active investor, I think you can learn some good business words in today's episode. The English expression we have for you later is follow suit, and we have a song of the week since it's Thursday. Don't forget to join our free email list at plainenglish.com/mail, M-A-I-L. That's where you go to sign up to get our episode announcements, which also include additional English vocabulary words and links to English articles about the main topic, all for free twice a week, delivered right to your phone or inbox at plainenglish.com/mail. 20 years ago, if you wanted to buy stock in a public company, here's what you had to do. You had to call a person who was wearing a suit, sitting in an expensive office, probably in New York. You had to tell that person what you wanted to buy. He would buy that stock on your behalf and charge you $50. Go back another 10 years, and it would have cost you $200. That person is called a broker. He, and it is often a he, matches the buyer with the seller of stocks, and the company he works for is called a brokerage. Today, you can log on to your online brokerage at any time of the day, and with a few clicks of the mouse, you can buy a share of stock in the U.S. or, increasingly, on many global stock exchanges at any time of day with no human involvement. And starting this month, it's free. Charles Schwab became the first brokerage firm to offer free trades to its clients. Other discount brokerages like E-Trade and TD Ameritrade followed suit. What once required a phone call and $200 or more is now free. Well, like many things that are free, there are some strings attached. We'll get to those in a second. But first, let's talk about why this is a pretty big deal. If you have money to invest for the future, then owning stock, owning shares in a public company is a good long-term investment. By owning shares, you own a tiny portion of that company. The share often goes up in value as the company generates more profit in the future. Obviously, that doesn't happen with every company every year, but if you own enough shares in different types of companies, you will do well over the long run. The problem has always been that it's difficult for someone with a smaller amount of money to own enough different types of shares to have a balanced portfolio of stocks. You don't want to invest all your money in just one company because that one company can fail. That's why you want to spread your investments out among multiple types of investments. But every time you buy something, it costs money. Now, if you have $1 million to invest, then the costs of buying and selling large amounts of stock are pretty low in comparison to what you have. But if you only have $1,000 to invest, then the costs of buying, say, $100 of stock in one company are high in percentage terms. For example, if you pay a $10 commission when you buy $100 of stock, that means you're already losing 10% of your investment just in the transaction costs. Secondly, let's say you decide a year later that you want to change your investment for something else. That would cost you $10 to sell your stock and another $10 to buy a new one with the proceeds. This is awfully expensive in percentage terms if you aren't investing a lot of money. Of course, it was even worse when it cost $50, but it's still bad enough when it costs $10. When I first started to save money and invest for the future, a single stock trade cost $15, and that was considered revolutionary back then. Then I switched to E-Trade, which was at the time $10, I think, per trade. I think it was as low as $7 recently, and now it's free. So here are the ways this will benefit smaller investors. Let's say you save a little bit of money every month and you'd like to invest it little by little. You might have a lot of money saved up in total, but if you want to add just $100 a month in stocks, it wouldn't make sense to do that if you had to pay $10 just for the privilege of buying. So with high costs, it's better to wait until you have a larger amount of money saved up. But free trades would let you incrementally add to your investments without worrying about those costs. Rebalancing is also a common term in investing. After a while, some of your investments will have done well, some will have done not as well. The economy may have changed, your life situation may have changed, and it makes sense to periodically look at what you've invested in and rebalance it, shift some things around. make sure that it still reflects your priorities. Sometimes, as a smaller investor, I would want to shift things around a little bit. Nothing drastic, just sell a little of this, buy a little of that. But sometimes it just wouldn't make sense because of how much it costs to buy and sell. So with free trades, investors can rebalance whenever they like and with whatever amounts they like. So this is good because it lets people get closer to what they want to have. Now, there is a danger to this. We can complain about transaction costs, but one thing they did was they made us stop and think if a trade was worth it. Now that every trade is free, investors are free to buy and sell stocks every day as much as they want. And that's the danger. Unless you're a true expert day trader, then buying and selling whimsically just because you can, that is an easy way to lose a lot of money. Now, I mentioned at the top of the episode that there's an asterisk. An asterisk is that little star you see next to the huge word free. The brokers who are offering free trades are not doing this out of the goodness of their hearts. If we've learned anything about Wall Street, right? They are going to make their money, just in other ways. One way they want to make their money is to tempt smaller investors to switch to their platform and then charge them money for other services. That's fine. There is nothing wrong with that. Giving something away for free in the hopes that some people buy a premium product is a perfectly legitimate thing to do in business. Wink, wink. But anytime you get something for free, you always have to think about why it's free. So here's another way a brokerage would make money by giving away free trades. And this one is a little tricky. So most investors will have money that they invest, like in stocks, but they also have some of their money in cash. And by cash, I mean not physical cash like bills, but in a bank account. In investing terms, we say cash is any money in the bank that's not invested in something else. So anyway, a lot of these investors or a lot of these brokerages that offer you, quote, free trades will also let you store your other money, your cash, in a bank account with them. How nice of them. That's great. But that bank account won't earn very much interest, even if traditional bank accounts with other banks do. And that is what Charles Schwab does. That's why their trades are free. People will move their money to Charles Schwab, trade for free, think they're getting a good deal, but they won't realize that they're not earning interest on money in their account that's not in the stock market. So Charles Schwab is making money here by not giving you a good rate of interest on your cash or the money that's not invested in stocks. That's not illegal. It's not unethical because they disclose it, but it's a little tricky in my opinion. So like many innovations, There are great things about free stock trades, but some things to be wary of. I personally hate it anytime there is something standing in the way of someone who wants to buy and someone who wants to sell. So on balance, I'm happy that stock trades are now free. One thing I don't know is how this works outside the US. And I know opening bank accounts and things, it's a very national thing. I couldn't open a bank account in Japan, for example. I would have to live there, show proof of being a resident or something. So I don't know what it's like in other countries. So I'd love to know if you can buy or sell stocks for free in your country, or how much it costs, how easy it is, things like that. Hopefully the trend here spreads worldwide for the benefit of all small investors. But if you want to tell me how it works in your country, go to our new comment section at plainenglish.com/199 and let me know. I want to say thanks to Victor, who sent me an article about Japan. He found this article that said car rental agencies would get cars back from customers and discover there were no more miles on the car than when they had left the lot. What's up with that? The Japanese people were renting a car, driving it around the block, taking a nap in the car, and then returning it. They need to be in the nap room. Thanks for the article, Victor. Secondly, Juanita from Colombia found the episode about the cyclist Egan Bernal, episode 182. Glad to have you with us, Juanita. Andres from Colombia is studying electrical engineering and practicing English and French on the side. Welcome also to Andres. Today's expression is to follow suit. It means to follow the example of another person. Charles Schwab announced that it would make trading stocks free on its platform. You can bet that there were some stressful meetings in the boardrooms of their competitors. A few of their competitors decided to follow suit. They decided to follow the example of the leader and make trades on their platforms free too. Why would they follow suit? Why give up this source of revenue? They were probably afraid that they'd lose customers to their competitor. It happens all the time in business. One company will cut prices or increase quality or make some type of change, and competitors will follow suit. You see this in industries that are extremely competitive. Airlines, for example. About a year ago, maybe 2 years ago, airlines started offering something called premium economy. It's a kind of seat that's better than economy class, but not as expensive as business class. I don't even know which airline first offered it, but most of the other big international airlines quickly followed suit. It's something that customers wanted, and everyone felt like they had to have premium economy on their long-distance flights too. So one airline went first, the others followed suit. Free 2-day shipping is popular for online shopping in the US. Amazon started it, and then other companies like Walmart and Target had to follow suit. They didn't do it right away, but they realized that if they didn't follow suit, they'd continue to lose customers. And now Amazon is starting to offer free 1-day shipping. 1 day later, you click your mouse, and the next day you have whatever you ordered. That's pretty fast. Follow suit comes from a popular rule in card games. Playing cards have 4 suits: spades, clubs, hearts, and diamonds. 2 black, 2 red. Those are called the suits. And in many card games, if one player plays a club, the next player must follow suit and also play a club. The next player must follow the example of the previous player. The song of the week is Different Drum by Linda Ronstadt. This one appeared in the final episode, maybe the second to last episode of Orange is the New Black, the Netflix show that just concluded this year. JR and I both watched that show, and we liked it. I liked the earlier seasons better, but the conclusion was good. And this song was in one of the last episodes. Different Drum by Linda Ronstadt. The key line in this song is, "You and I travel to the beat of a different drum." That means you and I have a different rhythm. We have different styles. We want different things. You and I travel to the beat of a different drum. The song is unique because it was written by a man from a man's perspective, but Linda Ronstadt is the one who sang it. I had a friend in high school who was always upset because she couldn't sing along to the most popular songs because they were written from a man's perspective. But that didn't bother Linda Ronstadt in Different Drum, which is the song of the week today. That's it for number 199. Thanks for being with us. We'll be back on Monday. We have a good topic on Monday: the differences between living in the US and Canada. That's Monday's topic. Don't miss it. And if you enjoyed today's episode, then you'll love Plain English Plus. It's our new membership program just for people who want to take their English to the next level. If you've been frustrated with other English courses, or if you think you're just not making enough progress, then come try out Plain English Plus. It's from JR and me, the team you already know and love, and we will help you take your listening, writing, and speaking to the next level. With a fast version of every episode, video lessons, monthly courses, flashcards, and our famous translations, there's something for everyone in Plain English Plus. Come check us out by visiting plainenglish.com/plus today.